Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is May 25th, 2012 edition of Market Outlook. So if you like our videos and market commentary, please be sure to go to www.marketgauge.com, sign up so you get this for free every week, or you can go to our YouTube channel under MarketGauge.com, just get the videos. So let's see where we are. You know, lots of news. The debacle of Facebook keeps on unraveling. Economic news that has been coming out in the last week, sort of mixed, not quite as bad as what we were getting in terms of the potential slowdown, and continued Eurozone issues, etc., etc. So more of the same. And also, we're facing this whole balancing our budget and fiscal crisis is sort of looming down, and that's sort of what precipitated the debt downgrade last year. So we're keeping an eye on that. So we got a bunch of headwinds, but the market tells the story. So let's see where we are. Well, first of all, we had what I would say, relatively meager bounce so far. We had this, fairly significant sell-off, and this week we're up a little bit, 1 to 2% in most of the indices. Now, as you can see here on these green bars, this, by the way, is the S&P 500. You got 2 accumulation days, so you had a really nice big up day, but it didn't have greater volume than the next than the prior day. But the next volume breakout you had was the following day, where you had still yet a marginally higher close. So you had a couple higher closes, and with slightly better volume than each prior day. So those register as 2 accumulation days. But more importantly, what's setting up here is something that's going to be fairly dramatic move in the next couple of days, is that you set up an inside day. So you sort of got this wedge type formation in here, or a potential pennant or flag, and or that you can consider that this whole pattern here is sideways. So you have 1, 2, 3, 4, 5 days, 5 to 6 days of compression. That's pretty good. So if you can get above this inside day, which was created on Friday, pre-holiday, very light as expected. So if you can get above this compression zone, you've got enough power built in here to have a pretty decent move. But keep in mind that the trend is deteriorating. You can see that the 50-day moving average is accelerating to the downside. So could you get a pretty violent move up to the upside very, very quickly? Absolutely. On the other hand, if we take out the prior day's low, Thursday's low, you could easily generate a test which could accelerate to the downside. So we have to be vigilant and let the market tell us which way it wants to go, and make sure you follow it, because you've got enough compression, and this 4 to 5 day pattern is very powerful on top of this inside day. Let's take a look at the weekly chart. And the weekly chart, as you can see, still holding this 200-week moving average. Again, another point, because the last time we stopped last week, and pretty much the lows of this week, right on that 200-week moving average. So if we penetrate this on the downside, along with all that work, that's going to be well noted, and that is an important convergence. So we definitely want to follow this move to the downside. On the other hand, bouncing off of this moving average with the type of compression could again lead to that test of this 65-week moving average. That sums it up for the S&P. NASDAQ. Let's take a look at NASDAQ. Well, NASDAQ, similar pattern, although there are some nuances here that make it a little bit more tentative, is the fact that you actually had some down days on greater volume than the prior, so you actually ended up with 2 distribution days in NASDAQ as opposed to 2 accumulation days in the S&P. So it's telling you that the relative strength here of this index is quite a bit weaker, and that definitely bears noting. And again, we have even more power building up within NASDAQ, as you can see that the level of compression, you now have 2 inside days in the NASDAQ 100. So when this thing moves out and takes out the high of this compression zone at around 63, or violates the low from Thursday, you're going to generate a test and possible acceleration to the downside. So this is the one to watch. There's unusual weakness. It seems like the index that led us up and was way outperforming is now coming back to earth, and more importantly, that's where the leadership came from, and it's unclear where it's going to emanate from going forward. Let's take a look at the weekly chart and tie that in. On the weekly chart, you can see that we've already broken through the 65-week, trading down. The next logical test would be at around the 200-week moving average, which is about the 50 to 59 level right in here. And again, there should be some pretty decent support right around where the old breakout occurred, and that sort of coincides with that 58.50 to 59.50 or 59 level. So things are playing out, in a very technical fashion. And let's go to the Dow. Again, the Dow, nice wedge or pennant formation. We stopped out up here against the highs on the monthly, and you can see the monthly trend, the 80-month, is still intact, but you have quite a distance to fall if we're going to get a test of that. So the first line of support is probably around the 11,500 level, or the equivalent of about 115, 116 off of this rising wedge. And then the ultimate, there should be some pretty good support. You can see how it acted as pretty good support even last year when we had the debt crisis. You attacked that 80-month moving average, but essentially you bounced off of that, held it. It's been a pretty interesting springboard and a zone moving back and forth through it. So I would look at support, but that's a fairly significant decline if we can get down there. Let's go to the weekly chart. As you can see on the weekly chart, I'm going to blow this up here. On the weekly chart, we're sitting right at that 200-week support. If we break through it, again, you look to the longer-term support on the monthly charts. Let's take a look at the volume patterns. Volume patterns, interestingly enough, no accumulation day. Oh, excuse me, I'm on a weekly chart. Let's go to the daily chart to look for volume patterns. Okay, volume, a similar story to the NASDAQ 100. We only had one accumulation day in terms of volume this week on the rally, and again, this is the index that's showing the least amount of oomph to it. And in fact, of Wednesday this week, when the the Dow was down 200. It actually took out the low of the move that was put in on this down move. So you sort of got a successful test so far. But again, another inside day. So all of the indices, all the key U.S. indices are lining up with an inside day. And in terms of a compression zone, if we can get above this day over here, we can certainly power out and get a test potentially of that declining 50-day moving average. But we're going to be looking for this next rally here to peter out. Sort of cyclically, we're due for a bounce. Okay, let's quickly move to some of the market indicators. You can see McClellan oscillator, intermediate term. We got the buy signal. You know, we talked about the hook. We got the hook, went through the critical level, and on an intermediate term basis over the next couple weeks, this is indicating a buy. So far, the buy has not materialized into much of a rally. Certainly, you can get a test back here with this still being intact. Going to the shorter term market internals, the advanced decline, breadth improving, but coming off of extremely oversold, has not yet generated a buy signal. Now, the up-down volume, so there is the other shorter term indicator, looking at over a couple days to potentially a week or so, on volume is starting to come back in a little bit to the upside, up volume. So you're actually at a buy zone. But what we like to do is look for these two indicators to confirm. So, you know, 2 out of your 3 looking a little bit, looking better. Really would like to see on a short-term basis this thing turn up through this critical oversold zone, and which would then generate a buy. Let's go to VIX. VIX, as you know, we had pointed out, we were not surprised to see this rally coming, as we were a bit frothy in negative sentiment, hitting and closing over the top of the Bollinger Band. The Bollinger Band close on the outside, and then a subsequent move back to the in would generate a short-term buy signal. However, please note that we're trading above the 50-day moving average. This is a pretty good gauge for sentiment of the intermediate term trend, and it is negative, clearly on a sell signal. And so you can also see that you sort of have this head and shoulders with bottom here, right? Shoulder, head, shoulder, and it seems that neckline is basically holding. This is actually a inverse head and shoulders. So you can see that we're holding this neckline and above the 50-day moving average, definitely still on a sell signal. Okay, let's take a look at bonds. First, let's take a look at the overall perspective. On a weekly basis, you can see that the long-term trend, or the intermediate trend in bonds, as well as the longer-term trend, 200-week moving average pointing up sharply. That test of the 65-week, which you traded under it for several weeks here, but now we're attacking the upper end of the of the highest levels in bond prices or the lowest yields we've seen. So it looks like the market is betting on additional easing across the board. Now, whether the market's right here or not, what it is, it's interesting. You're at a critical level. We're still at an overbought level in these bonds, right at the highs. And you also had yet an inside day and a pause day. So it'll be very telling on Tuesday which thing this breaks, or if we move out of these zones. It's hard to believe that rates are going to get much, much cheaper. There is a floor at some point, or a ceiling on how how high these prices can go, but nonetheless, these bond prices here, the TLTs, could potentially get up to 135, 140. Drop yields, another, I don't know, 0.2 percentage points. We're trading right now probably around 1.16 or so. This could get still down cheaper. So let's keep an eye on that, because this is a key factor. Also, what to note is how this 10-day moving average has contained this little sideways action, and again, compression. If we can get under this 122 level, takes out about a week and a half's worth of work, plus support level and this 10-day moving average all in one fell swoop. So that would definitely lead to potential correction down to the 117 to 118 level. On the other hand, a breakout to the upside, and again off to the races with rates, or up to the races with bond prices rising. Gold, you can see it's holding on a weekly chart. Its overall rising neckline here. We did break through the 200-week moving average, but critical support around the 145 to the 150 level so far holding. If we go to the daily chart, yet again another inside day. So we had a nice test of the lows. Let's see what happens here. Again, the daily trend, right? You're in a strong bear phase, but this is happening within an overall what I would call positive market, but in the longer term. For instance, if you look at the long-term trend, the monthly trend in gold prices wouldn't be fully destroyed until it gets under about 100. But that's $500 away. So long-term trend also under attack under this trend line. So you got a potential short-term bounce off of what I would call support levels. On the other hand, a failure of this test here would mean another significant leg down. Not sure how this would coincide with the overall fundamentals regarding interest rates, etc. But the markets, technically will play out. And again, a failure of this support level here could mean another at least another $50 or $60 move down from this 140. Let's see, what is it? 149 level or so. So you want to watch this, and again, 149, 155. Consider that a compression zone or a tight and wide channel. A wide range channel of $50. All right, I think that wraps it up for now. That's the overall picture of the markets. Have a great Memorial Day weekend, and look forward to seeing you next week. And bye for now. And again, don't forget, if you like this video and you like the market commentary, don't forget to sign up on our website, www.marketgauge.com, and sign up for this newsletter, or go to the YouTube MarketGauge channel and get this video there. Thanks, and bye for now.